How we doing, people? Welcome to another Forex Friday. Let's get started with the DXY.
My man!
Alright, so we had a pretty big move this morning, largely because of the Bank of Japan potentially intervening again in the FX market to backstop the yen.
Say what?
So that is pretty wild. Also not the first time. But yeah, let's start off with the DXY. We'll get to USD/JPY towards the end. Not necessarily meaningful in terms of the trade. It's more long term. We'll get to it, but let's do DXY. So let's get to the daily chart. Now, right now, you can't really fight this trend. The DXY is going higher because there's a dollar shortage when you got kind of liquidity drying up and all these people with dollar denominated debts having to basically just scram for dollars and try to figure something out. Inevitably leads to the DXY, the dollar in general, just driving higher. So we're probably going to have hiccups like this going forward until something really changes, like the Fed changing its policy or something really breaking that forces the Fed to change its policy. But in the meantime, I still wouldn't say the dollar is over. Sometimes you just can't fight these long-term trends. So I would keep that in mind. Just no need to fight it. It's going up. Now, if we see some crazy change in, I would say it really has to depend on a catalyst. I wouldn't necessarily view the trend even from a technical perspective, just because it's such a big macro. There's such big macro forces driving it right now. So say, I mean, we could easily trace back to what is this percentage-wise. So 1.5%. We could easily retrace. I wouldn't even be surprised if we broke down this low and then bounced higher. I've been saying for some time that I don't know if the dollar can go too much higher to like 120. I mean, maybe. I'm not going to say it can't. Obviously, it's possible, but I think it's already causing so many problems, and the Fed raising rates and all these other countries like the Bank of England, Bank of Japan that are in such distress right now. They can't really withstand a dollar getting that much higher, so I can't imagine it going to 120 without something breaking. But then again, who knows? Central banks are always good at taking a rabbit out of their hat, so definitely possible.
Come on, man!
But anyway, yeah, so I think in the medium term, I suppose we could see some sort of retracement into this area, possibly this area of demand, somewhere around there, give or take. Or just, yeah, anywhere filling this imbalance right here. I still wouldn't be surprised, though. I don't know if we're going to see... I wouldn't be surprised if we didn't get down that far.
That's what she said!
Because I'm expecting this slow grind to continue. The dollar trade is this trade that nobody wants to really join in because it's gone so high and people don't really want to keep just piling in when it's at these levels. So it's just like this incremental grind up in some sense with periodic just spikes down. USD/JPY is a more obvious example of that. But let's drop down to a lower time frame. So we have this range right here, right, that we're in. And we just broke below the midpoint. So I would maybe be looking for some sort of retracement into this area before a continuation to retest that range low. Just because we're having a lot of, if you look at this, let me get rid of this smaller one, make it a little cleaner. There we go. All right, actually get rid of this one too. So we're in this range, right? And we have been somewhat consolidating. I mean, if you get on lower time frames, it may not seem that way, but higher time frame, 4-hour chart, this seems more or less like just a consolidation around the midpoint. So once the market decides which way it really wants to go, like if we're finding strength or weakness, it's, in my guess, my base case would be it's going to test one of these, the range low or the range high again. Now the order, who knows? Right now we're seeing this momentum, obviously, so I wouldn't be surprised if we just ended up going all the way down to this range low, possibly catching a bid in this area of demand around here, really anywhere in this area to fill this imbalance. But realistically, wouldn't be surprised if we bounced anywhere in this general region. But still, in the shorter term, just given we're seeing some momentum, it's hard to say just because this was kind of event driven based off of the Bank of Japan and I suppose to a certain extent the Bank of England with Liz Truss resigning, that's wild.
Not crazy.
So maybe that will cause a little bit of a headache just because the market is anticipating that something's going to have to change and the dollar can't keep going up. So maybe we'll see some retest of this area and then a continuation down. Right? Basically a retest of the midpoint. But overall, I still think until the Fed changes their tune, stops raising rates, and or like the Bank of Japan, the Bank of England, I guess not the Bank of England that much, or like the EU, something crazy goes on where the Fed can no longer do what it needs to do or wants to do, then we're going to see something change in the dollar. But until that actually changes, there's no reason to be looking at the dollar basically changing its trend, because that is the force right now that's driving it. As long as interest rates are going higher and there's this dollar shortage, people are going to have to keep buying the dollar just because they're getting squeezed. Like, this is basically like the biggest short squeeze, like a global short squeeze, because of the dollar being the global reserve currency, everything being priced in dollars. So it's creating a lot of headaches, and that is not going to stop unless the Fed or something else breaks, but unless the Fed is forced to change its path.
Totally.
All right, that's enough dollar talk. Let's transition to the next pair. All right, so we got AUD USD. Now I'm eyeing this. I do like this price action right now, especially because, you know, consistent with the dollar trend going up. Other pairs like this one, at least if the you know, it's like XXS USD, then I would assume that is going to go down in the short, medium, long term, at least as long as the dollar keeps going up because of the things I just mentioned. Now I like this trade because we have a consolidation, right? Or like this potential trade idea. I'm not in it or necessarily going to take it, but this trade idea here, because you got this consolidation in this tight little range after leaving this range, and now we're expanding. And this is, I actually pulled this up as a good example. So this is a good, I guess, potential trading strategy you can look for. I mean, these patterns are pretty consistent. You have this, they call it contraction. You can just call it consolidation. And then you expand the range, usually on both sides. That's the key thing. So it gets shorts and longs out, retail, that is, you know, by busting lows and highs to grab all that liquidity, and then it continues on with the trend that was, I guess, always going to happen. So you can imagine that being this right here. This is the contraction, and now we're seeing this expansion. So my guess is, I mean, could look to this area potentially right here. Price comes into here, and then we go all the way back down to expand the range at or below this low, or possibly even just target the kind of the candle close range. I usually like to use the line chart to establish my actual ranges, just because it I don't know, I find it more consistent, because when you see the expanding of ranges with wicks, I don't really consider that. That's just kind of like the deviations and liquidity grabs. So I like to use the line chart to establish the range, and then you got these wicks that don't really count. So that's helpful, right? Little pro tip. So yeah, we got this consolidation, rough range we're trading in, and now we just expanded. So that is consistent with this kind of structure that we generally see in the market, but also confluent with this supply zone and this retest of the previous range. Because whenever you leave a range, it is very, very common for price, you know, we go down into a new range, you do whatever price does, and then you come back to retest that range, you know, grab any excess liquidity in this area, and then continue lower. Right?
Yeah.
Let me get rid of this. Whoops. All right, so that's basically what we're seeing right now. So I wouldn't be opposed to taking a trade out of this region right here, and then taking it. Actually, I'll get the order out to make it more clear. So somewhere in this supply zone, right? And you can just have your stop right above that area of supply, or even decide to do the midpoint. Doesn't really matter that much, I suppose. And then I would just be targeting the range low or a lower low. Now the risk to reward isn't perfect, so you could always just look for that better entry, get at least a 3R. It's generally my rule. But yeah, so something to the effect of this right here, and largely because we have this contraction, expansion of the range, and even if this trend ends up continuing, so, you know, say a couple weeks from now, Aussie dollar is all the way up here, I still wouldn't be surprised if we see this expand the range, come back down, expand the range, and then continue higher. So you could even play it on both sides. All right, so that is Aussie dollar. Let's transition. Euro USD. Okay, we'll go to the daily chart real quick. Okay, so everybody knows Euro has been a long-term stinker.
And we say bye-bye.
For reasons I've gone into enough. I don't need to go. I mean, everybody knows, like the energy crisis, war, and them just not being able to handle inflation and rates going higher, even though they have to. Long story. Anyway, so Euro down. That's all you really need to know. So longer term, higher time frame, you will be looking for sells. So it's just a matter of identifying those areas, and that's kind of what I'm focused on. Right now, it's in the middle of this range. Here, I'll go to this, make a little bit more sense. Okay, so actually we can fix this. All right, so we can consider this the range high, and then these moves right here are deviations, right? You deviate, and then you come back into the range. And actually, I have some other picture I can show. So this is two examples of this price structure, this price pattern that you often see with deviation style trades. So you establish a range, and these are actually separate. So this is not the same picture, just like turned into line form. These are completely separate. I actually got this one on the right online, and then I made this one on the left. So, and this was completely independent actually, which is kind of funny. So you create this range, right? And you expand the range periodically to kind of pull shorts, pull longs, all these retail traders, grab liquidity, and you keep expanding that range. And that's, in a nutshell, kind of what we're seeing already, right? So we have this range. We kind of, I guess you consider, oops, am I in draw mode? No. This isn't the cleanest example of the range low. I guess you could consider it right here. We had an expansion at the very beginning, I suppose, if you consider this a range low, but it doesn't really matter. So we had this deviation, we came back to the range low, and now we are potentially going to see another deviation above here, or as this line would suggest, maybe a pull from the supply, which would be more clear when I get back to the candles, and then a continuation back down to possibly expand the range one more time, or even past beyond this point. But basically, this is in a nutshell, the basic idea of these range deviation trades. You push up, establish a range high, and then sometimes you expand it to the bottom right away, sometimes it expands to the top right away. It doesn't really matter. Just know that the range is going to be expanded most likely. So you expand to the top in this case, and then you come back down, expand to the bottom, right? Consider this the range low, kind of where this impulse started, this originated. So you got this low, this high, and we break below it, grab liquidity, and then we push all the way to the range high again to expand the range one more time. And more or less, that is kind of the pattern that repeats. So this is why I love deviation trades, because the risk to reward is beautiful. You get in at the outside of the range. So you see that this is the range low right here, right? And you can draw it as zones like this line kind of indicates. It's not like a straight line. You can base it off a zone. It's usually smarter because price operates within ranges more than at specific levels. So you just try to enter somewhere. You could even have your entry right at the range low. Like think about retail traders. They have their stop there, and you enter at their stop. That's kind of a good, I guess, if you had to pick one way to view trading to be successful, is where are people putting their stop losses, and then enter there.
My man!
So anyway, you can enter right at the bottom here, and then just target the range high. I wouldn't necessarily target the actual high in case it isn't a deviation. It's like a pull from supply over in this general region right here, wherever supply is made. But targeting the range high, and then doing the same thing. You wait for a deviation, and you get clear back below, you get the retest of the range high, and then you target the range low. So that could be what plays out with Euro USD, and who knows. But like I said, I'll go to the candles now. So you could have some sort of, maybe if I put it on the 1 hour, be a little clearer. So you got this kind of supply region right here at the very top of that deviation. So it is possible, it's a little messy now. So it is possible we just go straight into that zone and then continue lower. Or like I mentioned with these whole deviation trade ideas, you deviate from this high and then you come back below. And I usually wait for a second one, because sometimes you see the second one clear a little bit higher. It's kind of like this pattern, right? And then you shoot below. That way, you know, again, gets all those shorts out. Whoops. Yeah, but again, looking longer term, short, for shorting opportunities. I do really like this level up here. Higher time frame, just because that is a clear level of supply that was never retested. And if you look at this, right, this is kind of like that expansion, those the contraction, expansion, and then continuation of the trend. Right, so we had this, we expanded the range to the downside, we expanded it to the upside, and then we continued to the downside. So it gets everybody out of the market basically that was basing stops off of these highs and lows. And this would have been a perfect entry, deviation, and then you come back down. But there is potentially a lot of liquidity, a lot of sell orders left in here, so I would be willing to probably take a sell if price came in all the way back down and then just target the new low. But short of that, just looking, you know, shorter term, this area is definitely an area of interest, but I would still be cautious of a potential deviation rather than a pure supply zone play. But for either play, I would be targeting, you could, the midpoint, target 1, the range low, target 2. I suppose you could have a target 3 at the actual low, assuming we're going to make one.
Yeah.
All right, that's enough Euro USD. Let's transition. Euro GBP. Okay. So this zone that I talked about, this kind of maybe zone, I think I talked about it last week, where you could say this was a demand flip supply just because you had a lot of liquidity in this area, right? You found a little bit of a consolidation and then a push down. So oftentimes when that happens, you see price just move back up to pull liquidity from that demand zone that was flip supply and then continue its trend lower. But that doesn't, I mean, it's still developing, but I would say that's not necessarily valid, especially because we broke above this high, though it could have just been a deviation. I would probably want to see one more deviation and then a break below this level, right? And then look for some sort of one last dip back into this demand zone flip supply to take it all the way down to this demand zone or lower. But higher time frame, this area right here has not been retested. This is when we had that kind of blow off top during the gilt market meltdown, and we came back down, retraced, consolidated for a while, and then had a large impulse down. So we never came back to fill any of this imbalance here, right? So that is what I would like to see. Now we could see a quick push up and then just a dip back down, but I would also be on the watch for price coming back in this area, consolidating. Again, this is going to be the theme of this video, this 3 market phase right here. So you see some consolidation, maybe an expansion to the bottom side to bust all those longs, and then an expansion this way to bust all the shorts, and then move down short, right? Now, I'm not saying that's going to play out. I'm just saying always be on the watch for that, those 3 phases, the contraction, expansion, and then the continuation of the trend. All right, but yeah, these are my levels I'm watching. This one is maybe at a lower level, makes more sense. Yeah, it's mostly just based off the high. It's not the cleanest drop, but you can tell we had this big impulse down, right? Price never came back into this level, so any sell orders that pushed it down here that weren't actually filled, the hell, get out of here. Any orders that pushed this down right here that weren't filled, that's still up in this region, could be met by price. So we get all these stupid trading view tab things.
And we say bye-bye.
Okay. Let me get rid of these drawings. I didn't do much. Anyway, okay. So yeah, I would be looking for price to come back into this supply zone potentially, and then head lower to a new low. Because again, I talked about this last week. I think when you see stuff like this in any market, really, this is generally a sign of a clear blow off top, blow off bottom, because price just goes crazy. And then you have just this massive wick that shows like the market is basically ready to switch directions. Like that was peak capitulation, right? So that being said, I think we should maybe be looking for sells longer term, because this trend is very likely shifting directions. If that is true, this is the blow up top, and that is consistent with price structure right now. So we're making lower lows and lower highs like this, right? So this broke here, made a lower low, so presumably we would be in store for a lower high off of this level. That's why I'm very interested in that level. You know, this playing out right here. I'm gonna have to get rid of all these drawings. This is a little too much for me. Okay, but yeah, so basically looking for some sort of push into that level for a move down to this range low. Let's transition now to Euro JPY. Okay, so this is actually a trade I took this morning. Let's do the higher time frame first, because it was a pretty low time frame trade. Yeah, so like every pair you look at, you always want to identify the secular or just the long-term trend via the daily chart or even higher, just to get your general bias. That doesn't mean, I took a sell this morning. Doesn't mean you can't take counter trend trades, but you have to take that in stride with whatever time frame you're basing your trades off of. So if you're going short, it probably should be a lower time frame trade, not a higher time frame one. But you get the picture.
Totally.
Okay, so we have been making higher highs, higher lows, obviously. So we got low, higher high, higher low, higher high. So if we're going to make a higher low, it could, or it very possibly is in this region right here, right? So we see price, marker, come all the way down to this level and then continue higher. And given we made this isn't a crazy move higher from this high, but usually say you got this high right here. Say if the next high was right here, meaning not all that much higher than the previous one, that can be a sign of distribution, because the market doesn't have enough strength, buying momentum to push it that much higher. And oftentimes when you see just a little push higher to make a new higher high, it's not a sizable one that really establishes a whole new range. That can be the sign of a peak, or at least a short-term peak, or we start making a low below, whatever the previous higher low was, maybe even all the way down to this level. I'm not saying that's going to happen, but because this isn't necessarily that close to this. This is a daily chart, so keep that in context. But given this wick too, a lot of selling in this area could be a sign that we are headed at least to this level. I gotta stop drawing so much, it's getting out of hand. Let me get rid of all this. Beautiful. Okay, and so aside from this level, in general, when you have a range, you leave a range, I think the midpoint is a good level to watch, especially if it is confluent with some sort of demand zone or supply zone in the opposite direction. Okay. Yeah, another reason this higher time frame demand, really the higher low off of which this new high was built, you have a fair amount of liquidity built up around this midpoint, right? These relatively equal levels that line up, right? So you could say that there's a lot of liquidity resting in this area right here because of these relatively equal levels that stops might be based off of. But aside from that, we do have this area right here where we had this large impulse that eventually this is the actual impulse that led to the new range. So this is an area of interest for that reason. We could see, and we're already almost there, right? We could see a dip back to retest the previous range, also dipping into this demand, and then basically playing out like this right here, that blue arrow, more or less. Just given this price action, I'm not all that excited to take any trades. I probably want to wait till it develops or focus on the lower time frame, like this one, which I'll get into now. So this is basically what I was just talking about with a lot of these other strategies. I mean, these other pairs. This same pattern that you look for, this contraction, expansion, and a trend, the profit-taking trend. So that's what I saw, and this is why I took this trade this morning, because we had consolidation, pretty tight range, and then we had this large expansion. And after I saw this sizable expansion, I think the RSI had made a new high at like 70, right here was a 73. I felt comfortable. I was like, okay, this is consistent with this contraction expansion. So I went short, and I always target the low of the range, even though in this case it obviously went much lower. That is not always my goal. I just target the lower of the range because that is the most consistent take profit. I guess that's the moral of the story, basically. Once you do these expansions, don't necessarily get greedy and try to target like all the way down to higher time frame demand unless you really want to. But in general, if you're doing a lower time frame trade, basing this off the 15-30 minute, base your take profits, your stop levels also off of like 15-30 minute levels. So this 15-30 minute range low is the take profit, right? You have contraction, expansion, you enter around here, and then I targeted the range low, and then I basically just moved my stop until it was about like 3. So I got 3.25 basically, because there isn't really a lot of price action to base that stop off of. You can go way back to when is this? This is December of 2014. Now take that with a grain of salt for sure, because that is so far back.
Damn!
But anyway, I drew out that zone just to be safe because we are in technically a higher time frame supply zone. But again, I was taking a 15-minute trade, so don't focus on that. Don't conflate your time frames. But yeah, so that's general idea. This contraction, consolidation, expansion, and then you target the opposite end of the range that you just left.
My man!
Okay, let's transition to the next pair. Euro, Swiss franc. Let's see if I have any opinions about this. Okay. So previous range right here, like I say often, wouldn't be surprised if we retest that range in some way or another, and then continue back down to retest this range low. That's a little bit higher time frame. So got some time before that would develop. Whoops. Am I trading you today? Okay, so let's go to the 4-hour chart. Now we got this area of supply, kind of. I don't feel that confident in it just because this is a little, I don't know, just like messy. It doesn't really look like a serious supply zone. I mean, there's like consolidation. It's almost like a trickle down. So in that sense, I wouldn't hold the same conviction with this level as maybe other levels. I might even prefer this level just because it's a more sizable red candle showing more selling pressure maybe built up in this area. Kind of overlaps with this zone as well, but I might base it off of that, especially because it is confluent with the range low, or this actual low of the previous range. So might do that. Let me get this out. So might prefer that zone, but just given that price action is a little messy, I'd probably want to wait for some more confirmation or take the deviation trade instead of a supply zone driven trade. In other words, maybe I'll even use this one. So in other words, you come up to test this previous range, maybe you make another high in here, and then as soon as you break below the range, you just wait for like some sort of retest of that zone and then target the new low. So something like that, just waiting for confirmation rather than just getting in on some supply move. And obviously it probably won't play out exactly like this, but that is the general idea of the deviation trade. You're just, get rid of that. You're just looking for price to push above, maybe grab liquidity, bust above this supply zone, maybe even go all the way down to the midpoint, and then do whatever. But as soon as it breaks below again, so you have this as the deviation, right, from this range, then you wait for some sort of retest to get short. All right, let's keep this ball rolling. Let's go to GPB. I can never say this right. like dyslexic. GBP USD. I don't know why I can't say it.
You're a fucking idiot.
Okay, so this is a little bit. See, this is a nicer supply zone just because it's a cleaner high. You have this larger red candle that shows there's a little bit maybe more selling pressure, and you have this range right here, right? So you have this range. I would love to see a deviation. Whoops. So a deviation from this range right here, right? But that's also consistent with this supply zone. And then maybe a push lower. I don't know if we'd go all the way down to retest this low. Wouldn't necessarily put it past it or be unwilling to take it short all the way down, but I would probably feel more comfortable targeting the midpoint just because, like I mentioned earlier, GPP kind of had like a blow off top moment with the gilt market, so it's possible that it doesn't necessarily retest that low. Again, doesn't mean you can't try to target that low, but I would feel more comfortable taking it to the midpoint of this new range that's been established. Get rid of this. Yeah, so this is the level I would be watching, and even if it pulls, again, it's kind of like I always go with this constant battle between like, is it a supply zone trade or is it a deviation trade? And it's really hard to tell which one is going to play out. Sometimes you can use structure to your advantage, like higher lows, higher highs, or lower lows, lower highs. And we are in a downtrend, right? But if this is the blow off bottom, then this could be the start of an uptrend, meaning we deviate from this level to make a higher high off this new like trend going this direction. So we push up to this level, get that deviation, and then we come back down, test the midpoint, and then maybe start making higher highs to continue that direction.
Not crazy.
I'm not going to say that is going to happen, but just given this aggressive move, I mean, this is not quite as aggressive as the one we were looking at, Euro GBP, but I guess, you know, if the dollar is going to go higher, definitely possible that we do make a new lower low, but still, my thoughts remain. Okay, so in a nutshell, we got this level, whether you want to look for it or look to it as a supply zone or wait for some sort of deviation above, grab liquidity, run stops, and then break below, maybe make another high, but then come below. As soon as it gets below this range, actually I'll frame that another way so we get rid of all this nonsense. So as soon as you get drawings, ridiculous. So as soon as you get a deviation from this high, if that does happen, I would wait for price to get below this range high again and then target the midpoint, because as long as it's consolidating above this level, you know, basically confirming that range, there's no reason to take it short or trust that it really is a deviation. And that could even goes with, this is probably a bad example. So even if it goes below this and then reestablishes fine strength, then we go higher. So this would be like the trigger to go long. So I wouldn't necessarily go short just off of one push back below. I'd want to wait to see if it clears above and then does that. But it's possible we get this and then the trigger below, right? So that being the trigger to go short and target the midpoint.
Say what?
Okay. Well, let's transition to GJ. I don't even know what the hell this is. Yeah, this pair for a while has been just too messy for me to enjoy. I'm not the biggest fan of this price action. We've had a number of deviations from this kind of center based. Here, actually, let's go back to this. So again, when you compare these two, this is kind of why I do the line for establishing ranges. It just makes a lot more sense, a lot cleaner. Oops. You can just tell the difference. So range low, right, based off of this, and the range high, I suppose you could base it off of this level right here, like the original high, or you could kind of tighten it to base it off of this one. It's all mostly subjective. Doesn't really matter that much, especially because how close they are. Maybe just cut it in the middle But yeah, we're deviating right now, right? We just deviated from the range. Get out of my way. So we just deviated from this range, and now we're back below the range high. So I'd want to see how price reacts to this level if we want to push above. Whoops. So if we go down from here, push above, find support, and then continue, that would be the deviation trigger long. And if we break below, even if we get back above, but get back below, and then really start finding resistance and pushing, maybe even wait till it breaks through to that lower low, so market. That doesn't seem right here like a good risk to reward, but you could also just say fuck it and wait for the retest of this range with your stop at this high, assuming it doesn't make a new high, and target the range low. Again, not ideal risk to reward, so I would not be taking this. I have found, like I said earlier, I found this price action to be just frustratingly messy. But yeah, those are my general thoughts. Just we're operating in a range right now for the most part. We had this potential blow off bottom, like I keep talking about with all the British pound pairs. Now with the Bank of Japan intervening, obviously there can be a lot of volatility entering the market, and at any day things can swing wildly one way or the other. So for that reason, always stay alert because the volatility is out of hand right now. All right, enough with GJ. Like I said, not a big fan. So let's move on to, we got the British pound and Swiss franc. We got daily chart. Okay, so it looks like we potentially could be switching the direction of this trend, making higher highs, higher lows. But in the meantime, actually, is there a higher time frame target? Yeah, I'm not convinced yet that the trend has shifted. It's possible we just go into this previous range right here and then dip back below. Even if we are making higher highs and higher lows, this could be the point where we grab liquidity, head lower, and then continue the trend. But right now, I'm more focused on a lower time frame potential trade idea. So again, theme of the day, right? We have this consolidation in this range, and now I am waiting for some sort of expansion one way or the other. Doesn't really matter. Expansions can happen any way, up, down, and I would be looking for an entry potentially in this demand zone if we, basically this arrow, for actually that's the top one. So expand up, look for a short, consistent with this higher time frame zone that I just put out there. You can even move this up a little bit more, but it doesn't matter that much. It's still generally the same area. But basically, actually let me make this a little bit more visible. I don't know if that helped. Yeah, so expansion up, look for a short, target the range low. Dude, these trading things are fucking shit at me today.
And we say bye-bye.
So yeah, contraction, push up, expand the range, and then getting short to target this range low. Or the converse, we bust below these levels, this liquidity line that I drew out. So expand the range to the downside, possibly dip into this area of demand, and then expand the range to the upside before continuing down lower. Right?
Yeah.
So those are the ideas. Pretty simple stuff. Now getting the exact entry is, I would say, probably the most complicated part of these expansion trades, because you never know exactly where the expansion is going to go. It's not going to necessarily be that crazy of a move, but it isn't always that consistent. Now, if you have zones like this to help give you some sort of direction, that can be helpful. So this zone over here, right? So just entry right into that previous zone. Not the most ideal, but at least something to give you an idea of where maybe to put your entry. And then this lower zone right here, so if we expand to the downside, this demand zone at least gives you something to glom onto, so you can potentially go long from around this area, have a tight stop below that level, and then again just target the range high, nothing too far. This is messy. The charts are messy today, guys. There we go. Right, so we get this expansion. I'll move this over, the blue one. So dip down into this demand area, or at least fill some of this imbalance. I could easily see it just getting to this midpoint, right? I think that's the midpoint of this this impulse imbalance that was created. Yeah, so basically where this alert line is, we could easily see just a push down into there, you know, an expansion that is, into this area, and then push back up to expand to the upside, and then a continuation. That is probably, I would say my base case. I just think longer term that the Swiss franc is probably going to gain against the British pound. So I might be more willing to take a short, but again, this is still a shorter time frame trade, so anything could happen, even if longer term the Swiss franc does gain. So I wouldn't be opposed to taking it either direction. I'm going to trust the trading strategy more than anything. So if we expand to the upside first, I will maybe look to take a short to the range low. And if we expand the range to the downside first, I will probably look to take it long to the range high. Got it? Okay, let's transition to USD JPY.
My man!
Okay, so this is kind of funny. I had this set up before this happened this morning, and it was really weird because I actually had it set up right there, and then I looked at USD JPY and I saw this pretty much exactly play out. So I basically copied these candles. It's one of these things on TradingView. You can just copy a string of candles like that, just place it wherever. So I copied this because my view right now on USD JPY is, number one, trend is up, don't fight it. There's no need to fight the trade because it's going up, so you might as well ride it.
Nice.
Now, that said, we are probably going to see, you know, aside from the slow grind up, just periods of volatility to the downside because of the tail risk of the Bank of Japan shifting its policy, intervening in the FX market, selling treasuries to buy yen, which, you know, puts downward pressure on the dollar, upward pressure on the yen. So for that reason, I'd probably say we're going to continue that same pattern, just a slow grind up, and then whenever the Bank of Japan just, you know, says whatever or throws a monkey wrench, tries to scare the speculators,
Right.
we see volatility to the downside, and then the market slowly trickle back up to test those levels again, and then break a new high, and then volatility to the downside, and then continue that until the Bank of Japan or the Fed changes something about its monetary policy. If the Fed continues to raise rates and the Bank of Japan is continuing with its yield curve control, pinning yields at near zero, 25 basis points for the 10-year, there's no reason this trend won't continue. These are the forces really driving this exchange rate right now, and the threat of the Bank of Japan intervening is what caused this, right? I suppose it was actually the real intervention. I think people were watching people are watching their treasury holdings and seeing when they decline, and people are looking obviously at the USD JPY pair and seeing the size that some people are throwing in there. And I believe I actually had this article right here. Maybe I'll just throw up. So it looks like the Ministry of Finance in Japan is intervening here. We are seeing lots of dollar selling and the yen moving almost vertically as shorts get squeezed.
Little bitch.
We are hearing large blocks are being traded. That typically means either large institutions are moving money or that a central bank is intervening in size. The clearest evidence is just the scale of dollar selling that is happening. So in other words, this move is based off of people watching the market and saying nobody who isn't just like a huge player could be doing this. And so the assumption is that is the Bank of Japan selling treasuries again to buy yen. So this is why we see this. But as I keep mentioning, as long as the macro story, the macro trend remains intact, that thesis of the Fed, the interest rate differentials, the Fed is raising rates, the Japan is pinning rates, not doing anything. And as long as the Fed remains hawkish and the Bank of Japan remains dovish, we're going to see this keep happening, the same pattern, I would assume, of slow grind up with these periodic large red candles. So I think I alluded to this. Jesus.
You're a fucking idiot.
Alluded to this earlier. that I don't really like USD JPY in terms of trading, especially short term. But if you want to just hold it and try to ride that wave, by all means, I would probably look at these big red candle days like today as buying opportunities. Maybe we head a little bit lower down into this region, but I would say unless something changes, big picture, we're going to be headed higher in the coming weeks.
My man.
Okay, let's transition to USD Swiss franc. Daily. Okay, I hate this pair recently. I don't know why. It's just this range is just silly. It's hard to explain. But we just saw a deviation, right? Now, I don't think this is a clear sign yet that, like, let's trust this deviation and look for a short, especially given it's the dollar. I'm always scared in some sense to short the dollar just because it burns people and it's burned me so many times. But I would like to see some more price action develop, how this continues, because personally I would like to see at least one candle close above this range and then a deviation below, because right now the market could still be figuring it out, basically consolidating here, and then we just see this jump. That's probably what I would expect if it does consolidate, kind of like building up volatility, and then we expand this way to this new range and maybe come back down and do whatever. But in the meantime, I'm not really that excited about taking any trades for USD Swiss franc, just because I don't know, I still think it needs to prove itself in terms of which direction it's headed. It seems like we're just in this range. Actually, I'll get down to the lower time frame. Yeah, so we're actually in potential demand right now. I would probably wait. Whenever you see these large impulses down, I'm not eager to jump in because, I mean, you do see it, but it's not as common that you see these large impulses followed by just like a V right away. Definitely possible, especially in today's market.
Totally.
But I would want to see how it reacts to the zone. If we start pulling liquidity from it and making higher highs, possibly. But even then, not necessarily looking to take buys right here, especially because we're trading in premium territory, meaning above the 50% level. I would prefer to wait for some sort of deviation trade where you get confirmation that it wants to leave this range, because taking buys at the top end of the range without really confirming that you're going to deviate from it seems like a bad bet to me. It's you're buying at resistance, it'd be like selling right here without confirmation. Not that that isn't a bad idea, especially if you catch the trend shift to the new range, or the trend shift to the new range higher. Definitely possible, but in general, this price action isn't that exciting. I'm not really looking at any specific trades, but like most dollar pairs, I suppose I am still bullish, but I would want to see some sort of proof via deviation, maybe consolidation, and then like finding support really above this and then starting to push higher. But yeah, I don't know. I think I've talked enough about USD Swiss franc. Let's transition to a more exciting pair. Hopefully. I don't know. What is this? USD CAD. Okay. So our daily chart, this has been a wild move. I mean, just look at this uptrend. Pretty aggressive. I don't think. I think if the dollar gets all the way down to, all the way down to this level, it's, what is that? It's a pretty big job. So I guess in short, I wouldn't be looking for a retracement into this level, even though you could say like you got all this higher time frame imbalance from this huge move up. That's a pretty big move. I don't think that unless something really changes in the whole direction trend of the dollar shifts, I don't think we'll get that low. So higher time frame, wouldn't hold your breath for it getting down to this level, and by that time it may be the end of the trend, so it might not be worth it. And let's get down to lower time frame. Here's another kind of messy one. Let's get the line chart real quick. Okay, tighten this up. Yeah, so we have our range, right? And oh, this is a good example of, where is it? right here, right? So it's a good example of this range deviation, right? So we had this range high, range low, and then we expanded the range to the upside, expanded the range to the downside, came back up, expanded the range once more, and now we're, I mean, it's almost playing out exactly like this, right? So basically, instead of, like imagine this went back to the range low to establish the range low, and then other than that, this is pretty much like exactly how this is playing out. So this is often why I like to refer to this, these patterns, just because you do see it quite often in markets. And this is like the modern day patterns that I think traders can really look towards. They're more complicated. It's not like a bull flag where like you just see this triangle, you're like, oh, it's buy.
You're a fucking
I
idiot.
wouldn't trust that. You gotta adapt and come up with these more complex patterns, and I think this is one of them that can help you. But yeah, so that's more or less what we're seeing, and I don't know if that really helps. I mean, this is kind of hindsight's 2020, right? But let's see what we got. So, what is this? USD CAD. Yeah, again, I don't really want to short. I'm so just convinced that the dollar is going to keep screaming higher so long as things stay the remain the same in terms of monetary policy and all these central banks just sticking to what they're doing. So I maybe would be looking for some sort of buying opportunity, like a deviation below the range low, right? And then a return, find support, and continuation higher. So that's probably my base case. I would prefer something like that. And then in that case, I suppose I would probably just target the range high as target 1. And then depending on where that low goes, you can move your stop accordingly to where it matches, like right here, this being the invalidation level. So that is probably what I'd be looking for, especially given that we are headed lower right now. We have this downward momentum. So I'd want to see price push below the range, maybe even deviate past this level. So run liquidity, deviate, come back up, and then I'd want to see it get all the way back up to this level. I don't want to see it just bounce off at this level right here. So here's a little messy now. So price pushed down. Let's get this low mapped out. So if price went down below this level to make a new low, and as a deviation, and then came back up, I wouldn't look to go long off of this retest and push, even though that might end up being more profitable. I'd want to see price reclaim this range low based off of this level. So this red line, pretty straightforward. All right, let's wrap this up right now. Let's go ahead and end things with gold. One thing to keep in mind about gold, as long as the dollar goes higher, gold is probably going to go lower. There's going to be an inverse relationship between the two. When you think about it, gold is denominated, at least if you're in the US, denominated in dollars. So if the dollar is going higher, all else being equal, gold will go lower because it's denominated in dollars. So dollars go higher, gold goes lower, right?
Totally.
Now, if you're in holding euros or yen, then gold is probably going up, or at least it has been over the last few months. But as long as the dollar is going higher in dollar denominated terms, gold will probably go lower. So if you think that the rates are going to go higher, then you probably, or the rates and the dollar are going to go higher, then you probably don't want to look for longing gold, at least in a higher time frame sense. So with that in mind, it looks like we're catching demand. Let me get back to this right here. So it looks like we caught a bid right here off of this potential area of demand. So now I'm not necessarily getting bullish for the reasons I just kind of talked about with the dollar edging higher, but we could still get a short-term rally possibly into this level. I mean, this is pretty straightforward, nothing super messy. This level right here, and it lines up with this zone shift, I guess, right? So this zone shift price already came in there though, so you have to keep that in mind. So we already tested, meaning there may not be that much leftover orders or liquidity to push price all the way down here. So it's here, what is the percentage on this potential move higher up here? Yeah, 8%. That would be a pretty big relief rally for gold. I don't know, maybe if something crazy develops in the war, like nuclear threat or something, you see a huge jump in gold. Wouldn't be surprised in the slightest if that happened, but obviously not saying that's going to. But I suppose that would be a next area of interest, somewhere in here, consistent with this larger downtrend, right? We got a high, got a low, and so you could say, because we haven't made a new low yet, so who's to say that we don't come all the way back into this level, or at least fill some of this general region between these two zones. Now, if we drop down to a lower time frame, yeah, I guess I'd still be looking at this level. I'm not really that interested in gold, to be honest. I prefer like longer term trading gold, but I would still, yeah, I guess I'd just be eyeing this level right here, more or less. You can tell this show is very much tapering off right now.
You're a fucking idiot.
So with that said, you know, I'm gonna do one extra. We're gonna add Bitcoin to the mix real quick, since gold was a little bit of a stinker. So Bitcoin's been holding up surprisingly well recently. I have been surprised. It's been like a stable coin for like 20,000. But let's just go over this price action real quick. So if we go to the line, we got this range right here. Actually, we can tighten this up a little bit. Base it off of that. Yeah, so we have this range. We have deviations. We came back below, deviated from the, so range high, range low. We pushed up to deviate from the range, came back in below to deviate on the bottom. And now we're consolidating towards this bottom range. So what I would be looking for is, oops, what am I looking for? There we go. Is a lower time frame deviation, basically. So we have this consolidation. Actually, we'll get back to my line. So this is like the expansion, right? The contraction and expansion. So you can say we already kind of had this. And this is like fractal, right? So you're looking at this, deviations, deviations, and you get down to this range, and we have more deviations. So that's what I'd be looking for right now. Deviation to the downside, and then reclaim, retest the range low, and then push higher to at least this level, if not one more deviation to expand the range even higher up to here around this midpoint of the higher time frame range, and then possibly a continuation lower. I think my base case is that Bitcoin heads lower as long as, you know, it's considered a risk asset by big players, institutions, and the I guess the risk assets are going to head lower, just given where we're at in the liquidity cycle, credit cycle, all that stuff. But I do like this level right here. It is the range high, consistent with this supply zone. Actually, let's get back to the candles, be a little bit clearer. So this is area of interest number 2. Again, that's a sizable move up though, so it probably would be a while, if at all, till we get there. Yeah, 20%. Probably not going to happen unless we have some serious change. But, you know, if we get a short squeeze or something like that, I would be looking to short in this region. But yeah, aside from that, shorter time frame, just look for these deviations, some sort of deviation possibly even below this level. And then, so dip below that, and then come back up, reclaim the range, and then target the midpoint, and then maybe the supply zone if we're really feeling bullish. But yeah, Bitcoin has been surprisingly not volatile compared to other markets, meaning not necessarily good for trading. But all that, who knows? Volatility could just be being delayed until some big event where we see some big 20% jump one way or the other. Stay tuned. But that is all I have for you today. But as always, stay happy, humble, and most importantly, solvent. And I'll catch you all next week.
And we say bye-bye.